Good morning students, welcome back to the class 12, subject accounts. In accounts, we are into the last phrase considered as purchase consideration, and in this we should know that purchase consideration is being done on behalf of money. You are not paying money for the particular share, but you are purchasing something and you are issuing a share on behalf of that purchase. It is considered as purchase consideration. Here, physical money is not been given for the certain purchase, so it is considered as purchase consideration. In today's topic, I have two questions for you, and if time permits or if time is not taken too much, then we will carry forward with the third question also. But let's begin with the first two questions. I am having a question number 16 for you. Goodluck Limited purchased machinery costing of ₹10,000 from Fair Deal Limited. The company paid the price by issuing equity shares of ₹10 each at a premium of 25%. Past journal entries in the books of Goodluck Limited. Here it has been a question over here. As I have read all the questions. In this, it has been said that the machinery was costing of ₹10 lakh, which has been purchased from Fair Deals Limited. Now, the company has not paid the amount of 10 lakh rupees, but they have issued equity share at the premium of 25% on 10 rupees. So let's begin with the in the books of Goodluck Limited. So write it journal entries in the books of journal entries in the books of Goodluck Limited. This kind of questions can be asked for 2 marks also, 3 marks also. So let's begin with the first concept where you have purchased a machinery. So I am writing an entry because the purchase account. Instead of purchase account, we have to write a machinery account because it is an asset. Machinery account debit to Fair Deal account. This is a basic entry which has been done in 11th standard also, but in 12 also it is a basic entry. The amount will be of 10 lakh rupees. Because the goods which the machinery which has been purchased by the Goodluck company is costing of 10 lakh rupees. Write the being is compulsory for every question in journal entries. Being machinery purchased for ₹10 lakh from Fair Deal Limited. This much entry is enough for a basic transaction, but the exact thing we have to do is 10 lakh has been divided into 10 and 25%. As you know that 25% will be occurred as 22.5 rupees. So you have to do 10 plus 2.5 is equal to 12.5 rupees has to be adjusted in this share. So first thing, you have to calculate the exact shares how much has been issued. So let's begin with the working note over here. But I don't have the space, I'll do it in the box. So it will be easy to you to make sure that how much share has been issued, because it is including premium. Let's go with the total cost of ₹10 lakh. As you know that the company has issued 10 lakh rupees share, where 10 rupees is face value and 2.5 rupees is an premium. Now we have to do 10 lakh divided by 12.5. If we do this calculation with complete our concept, then get 80,000 shares. I hope you are understanding what I am trying to say. Once you cancel this all the concept, you will get the amount of 80,000 equity shares. Now what we have to do, we have to make an amount of 80,000 shares. As you know that, as I have said the calculation, now we have to know that, we have known that 80,000 shares are being issued by the Good Luck Limited. Now we have to enter the entry for that particular transaction. Now entry number 2 will be, because we have to deal with fair dealers, so we have to add Fair Deal Limited account debit. As you know that the 10 lakh rupees has been converted into a share. It is considered as purchase consideration. So now we have to go with 2 equity share capital account, and it has also an inclusion of securities premium. So you have to write 2 securities premium account. Now our major problem was how much amount has to be added. As we know that 80,000 shares into 10, this is equal to 8 lakh rupees, which is an equity share. So right here 8 lakh as an equity share. The remaining balance of 2 rupees 5 paise, 2.5 paise, 2 rupees 50 paise, it will give you 2 lakh rupees as an securities premium. This much entry is enough for a purchase entry. Now we have to write the entry as a B. So you can write B. Equity share capital has been issued on purchase consideration of machinery. So you can write accordingly here. So I am writing a different one. B. Equity share issued on 80,000 shares at the rate of rupees 10 and premium paid. This much is enough for a simple understanding. Now we are going with the next question. The next question is related to a company who issued 30,000 shares, fully paid up shares. But their stock has been different. So let's begin with the concept here. A company issued 30,000 fully paid up shares of rupees 10 each of purchase of the following assets and liabilities of Sharma Company, not N Company. It is Sharma Company. Here it has been mentioned plants of 7 lakh, then lands of 12 lakh, then stock in trade 9 lakh, and sundry creditors of 2 lakh. You are required to pass journal entries. We have to make an entry for this particular transaction. So let's begin with the journal in the books of a company. So I am writing the first part where we are having an assets and liability, and then a company, a Sharma Company, which has been given a 30,000 shares at the rupees of 100 each. We will calculate this amount first. 30,000 shares multiplied by 100. That means 30 lakh rupees shares are being given to Sharma and Company. Let's begin with the first part. I am giving one space because we need to write one more thing. But before, make sure that the entries are being written. First, plant account debit. Then lands are also being debited because it is an asset. Land and building account debit. Now Here it has been said stock in trade. The stock in trade is also an asset. So write stock in trade account debit. But here sundry creditor is a liability, so it has to be written on credit side. So write to sundry creditor account. What about amount? The amount has to be written as it is over here. So for plant it is 7 lakh, whereas for land and building is 12 lakh. Then stock of 9 lakh. Now sundry creditor is 2 lakh. Okay. Now it has been said company issued fully paid up of shares. So to Sharma company account of 30 lakh. As I have already done the calculation, 30,000 into 100, I will write over here 30,000 into 100. So it is costing of 30 lakh. Now we have to tally the amount because the tally should be done for a specific. As you know that on the credit side it has 32 lakhs. On credit side it has a 32 lakhs. So I am writing here. On credit side it has 32 lakhs. Okay, but on debit side I'll say that it has a less amount. Less amount in the sense we can calculate this 21 and 7. 28 lakh rupees are there on debit side. The deficit is of 4 lakh rupees. So this 4 lakh rupees is nothing but it's a goodwill of the company. So you have to write here goodwill account debit 4 lakh rupees. I hope you understood how this 4 lakh rupees has come. So be careful with the calculation also. Now we have to give a share to that particular person. Entry number 2. Write Sharma. Here we have not written being, so being part can be written by you also. Sharma. I am writing the second entry. Sharma company account debit to share capital account because we have issued the share capital to Sharma company. What would be the amount? The amount will be 30 lakhs because it has been mentioned in the question. The amount should be given as 30 lakh rupees. So this much is the easiest questions for you. Now we can complete one more question for you and then I'll wind up this chapter fully. To the question number 17, 18, not 17 because 17 has been done with the 2 questions. So today we are to the third question for today. Let's go with the question, then we will enter the journal entries for this. Sandesh Limited took over assets of 7 lakh and liability of 2 lakhs from Sanchar Limited for the purchase consideration of 4,59,500 and 8,500 were paid up except in the draft in the favor of Sanchar Limited. Payable after 3 months and balance was paid by issuing equity shares of each at the premium of 10% in the favor of Sanchar Limited Power Server entities. In this question it has been said that 7 lakh rupees assets were being given by Sandesh taken by the Sandesh in the favor of Sanchar Limited and liability of 2 lakh rupees from Sanchar Limited. Now in the purchase consideration it has been mentioned that 4,59,500 rupees is purchase consideration. Out of that 8,500 were being paid by the accepting in the favor of Sanchar Limited. This balance amount was being payable after 3 months, but the issue of shares at 10% and the premium of 10% has been taken to Sanchar Limited. So let's begin with the question's main concept. Now, as you know that the assets of rupees 7 lakh, so you should write sundry assets account debit as rupees 7 lakh, but liability is less than the 5 lakh rupees difference will be there. So write to sundry liabilities account of rupees 2 lakh. Here you can see that the difference is of rupees 5 lakh. So in 5 lakh rupees it has been mentioned clearly the purchase consideration of 4,59,500 has been given. So right here to Sanchar Limited account. Now the amount will be 4,595,000, but still a certain differences are left. So I'll calculate here for you, so that the balance amount which is not being given in either way, so it will be a capital reserve for the organization. So write to capital reserve account. I'll calculate for you 7 lakh minus 6 lakh 59,500. So the remaining balance will be a capital reserve. The remaining balance will be 40,500. If you minus this, the amount will come as 40,500. But the major problem will be how much amount has to be issued. As it has been considered here, I'll write a working note over here. The balance has to be adjusted. So first thing, you write the entry number 2 where the Sanchar Limited has to issue. So write Sanchar Limited account debit. Here total amount is 4,595,000. But it has been mentioned that the security minimum of 1. So 10 plus 1 is equal to 11 rupees has to be taken. Again I am writing 10 plus 1 is equal to 11 rupees has to be collected by the organization. 10 rupees is the face value of that particular shares, but 1 rupees is a security premium. First thing you should do the total calculation, 4,59,500. Out of that, bank has to pay by bank or by check. They have paid 8,500 rupees. So if we calculate this, the amount will be 4,5,1,000. This much amount has to be there as a purchase consideration. So you have to calculate the number of I love this. Again I will share it. You have to find number of equity shares. So there is a formula for equity share. You have to write purchase consideration upon issue price. I write it full form. Issue price. So purchase consideration I have shown you how I have calculated. I have calculated again 4,595,000 minus 8,500. If I calculate this, then I will receive 4,51,000. So my purchase consideration will be 4,51,000 divided by 11. If we do this, we will get 41,000 shares. You can calculate this with the help of calculator or mobile calculator. You will find that 41,000 shares are being issued. Now we have to write 3 entries more here. One is related to share capital account. 2, because the amount has been issued, sorry, not share capital, but here we have to write share equity share capital. Equity share capital account. 2, securities premium account. 2, bank account. As calculation we will do 41,000 multiplied by 10, 41,000 multiplied by 1. We will get the amount here 4,10,000. Here I get 41,000. The rest amount which has been given to Sanchar Limited is 8,500. If we calculate all the amount, our total of share issued will be matched with the total which we have to adjust. So, according to this question, I have given you a formula also over here. The formula is number of equity share can be calculated by purchase consideration divided by issued price, and then we have to enter this entries. That's it for today. Thank you.